When someone goes to bank for a loan, balance sheet में bank actually क्या देखता है?
Bank will look at their balance sheet and see how much cash flow are they making, how much liquidity do they have. On the books you are in profit, your company's revenue is growing, but you don't have money in your hand, then the bank is going to consider this as a red flag.
Why a person should appoint a finance officer?
You have a full-time accountant.
Yeah.
He is doing his work very diligently. He looks at compliances, ensures everything is filed in time, coordinates with your CA once a year during audit or during return filing. But is he talking to you on a daily basis about what is going on in the business? Does he have that understanding?
मुझे अगर डैशबोर्ड बनाना है and if I have to spend a 60 seconds and check कि मेरे कंपनी में क्या करना है, तो उसके लिए क्या डैशबोर्ड बना सकते हैं?
The moment you look at that dashboard, you should be able to see what is my sales till date, sales for the month, receivables, my payables, my stock, and my bank balance.
Banks or investor, who is a better option?
People always feel that debt is costly. To be honest, equity is costlier than debt. People think equity investment is coming in for free. The biggest cost is you are giving a part ownership of your business to the investor.
What amount of salary a business owner should pay?
So the clear measure is that
Hello and welcome everyone to our channel Veekay Talks, where we share wisdom and success stories of Indian SME entrepreneurs. Today, we have a guest from finance background. He's a CA and working as a virtual CFO for many companies. He's an expert making financial dashboard for the SME owners with each and every processes. So welcome Sudanwa.
thank you.
So let's start with the pinpoints. You work with SME in and out. So what the blind spot you observed in Indian SMEs?
So basically, while working with SMEs, the first observation or the most important observations that comes to you as a finance professional is that the business owner is functioning as per his gut feeling. He is more focused about what he feels about his own business rather than actually taking feedback from his business. What is important is, and why businesses grow, is because they take active feedback from their businesses. This active feedback is predominantly lacking in SMEs, and the SME owner is of the opinion that whatever I am thinking is in the right direction because I've been doing things like this for the past 25 years, 30 years that I'm in business. But to be honest, everybody knows that trends change, or the thought processes or your approaches should change every 5 to 10 years. Change is the only constant, as we say. So right now, what is very important is that you take feedback from your business. And that is what is the biggest blind spot that I see these days, that people are not taking feedback, active feedback from their business.
What do you mean by the feedbacks?
So basically what I mean by feedback is, as an SME owner, they are focused on sales, marketing, production, operations. They try to control each and every factor going on in their factory. But the feedback that needs to be taken is from a financial standpoint and not from a generalized standpoint. So for example, taking feedback does not mean that you come to office and do a stand-up meeting or take a daily huddle and people feel that I'm doing that, so I'm taking active feedback. That is not the case. You should build your own financial checkpoints, or you should have so much in-depth knowledge about your own finance, the finance of your business, that the feedback should be from a financial standpoint. Operations are running daily, sales and marketing team is working daily, logistics and transportation teams are working. But what is my financial gain or loss in each and every activity and all activities combined together that these teams are doing individually in sync with each other?
All the business owners have the accountant for their bookkeeping, taking care of their deadlines for the taxes and everything.
Correct.
So what you are saying is apart from that.
Absolutely. So what an accountant does, so the basic difference between an accountant and a CFO is that a CFO is supposed to build insight for the business owner. He is not there to take care of the books. He is not there to ensure that data entry is happening. I mean, of course, that is an integral part of the process, because without that, the feedback which I spoke about, taking that would not be possible if you don't have data in place. But what people fail to understand is that having an accountant in place, he doing data entries regularly or taking care of compliances regularly is not the ultimate aim. The aim is that what does my data say? So the difference between an CFO and an accountant is that the CFO will analyze the data that is going into the books and derive results out of it which will be discussed with the business owner at regular intervals.
So here is something I always wonder. When someone goes to bank for a loan, they show their P&L, they show their project reports. Still, many of the times, bank never thinks about him in a positive way. So, what actually the bank is looking in their customer for providing them the finance?
To be honest, the biggest factor that a bank will consider is stability of their business and the potential to sustain their business. So, as you pointed out rightly, everybody goes to the banks with their profit and loss accounts and projects report. Now, what does a project report contain? Predominantly, it contains projections as to how my revenue is going to grow, how I will be more profitable in the coming years. But bank correlates that data with the balance sheet of the customer. So the heart of your business is actually your balance sheet, which everybody, I mean 90% of the people fail to understand. What people feel is that balance sheet is a document which is to be prepared once a year before tax filing when you go to the CA or when he comes to you for audit, and then prepare the balance sheet and you're over with. But that balance sheet actually depicts how your business is right now. It is the clear, an insight into your business for a third person.
So, being profitable is not the only case. मतलब प्रॉफिट में धंधा रहो या ना रहो,
Absolutely.
तो प्रॉफिट में ही सिर्फ चीजें हो तो इजी है ऐसा नहीं है.
नहीं,
सो व्हाट एक्चुअली बैलेंस शीट में बैंक एक्चुअली क्या देखता है?
प्रॉफिट में चीज़ें हो ये बेशक बहुत अहमियत रखता है, बट सिर्फ प्रॉफिट में रहना इज नॉट दी एम. आप अभी देख लो ये स्टार्टअप्स इतने सक्सेसफुल क्यों है आज की दौर में. नाउ दी स्टार्टअप्स आर सक्सेसफुल नॉट दे आर इन लॉस. सो अ सर्टन फूड डिलीवरी स्टार्टअप which is very famous was in loss till last year. Their valuations are skyrocketing. Now why is that, and why do the investors have confidence in them? Is because they have potential. Now applying the same logic to MSMEs, SMEs, they have already shown their potential because their business is in existence for many years. But bank will look at their balance sheet and see how much cash flow are they making, how much liquidity do they have. See, bank is only concerned with I am giving you my money, you should be able to repay it to me when I demand it.
Okay.
So on the books you are in profit, your company's revenue is growing, but you don't have money in your hand, you are lacking liquidity, then the bank is going to consider this as a red flag.
So, let's check in your CFO or in finance perspective. See that if I want to buy a machine around ₹1 crore or want to build a sales team of around 5 to 6 people. So what kind of things I have to look or what kind of provisions I have to do?
So if you are looking out for buying a machine, then what I will first consider is that how much is the investment going into the machine? What benefit is it going to give my business? Benefit in terms of financial perspective. Is it going to ease my production process? Is it going to increase my throughput? Is it going to reduce my labor costs? Is it going to automate my processes? If answer to some of these questions is a yes, and the financial benefit deriving out of it is compared to the cost of the machine, apportioned over many years of the life of the machine, if this beats the cost, then definitely I should go for that. An investment decision is a long-term decision. It is not in the spur of the moment that you decide. You have to give it a lot of thought. What usually happens with people is that they are looking out at a prospective order. They see that if I achieve this order, I'm going to make good revenue or good profit. But to achieve that order, my current capacity is not enough. So let me go and buy a machine. What about the future? If that is a one-time order, I as a CFO will obviously suggest that obviously we'll weigh down the benefits of buying versus making. This is a make versus buy decision. So rather than buying the machine, if I outsource this order, get it done from multiple vendors through proper quality checks, then I will make lesser profit, maybe marginally, but at least I will not lose out on my liquidity. Because the moment I decide to buy this machine, I am taking a loan on my head. That asset is going to come into my business. The depreciation of that asset is going to hit my books. All these factors need to be considered. A holistic viewpoint is required.
Okay. Now coming to your virtual CFO services. What kind of services you provide, and how actually it is beneficial for the entrepreneur?
So all big corporations today who are either listed or who have substantial turnovers have a full-time CFO in place. A CFO is a chief finance officer. What virtual or fractional CFO means that you cannot afford a full-time CFO because you are an SME.
Sorry to interrupt you. Just elaborate the role of CFO.
So the role of the CFO, he is an advisor to the business owner. He is supposed to give advice and build strategies around finance.
Okay.
So he is supposed to look at data, look at the current state of affairs, but it is not limited only to financial numbers. A CFO today has to dive down into operations, has to dive down into production, has to dive down into logistics and sales and distribution. Each and every department, how is it functioning? What is the contribution that they are bringing in versus what is the leakage that is happening in each of these processes? This needs to be analyzed. A CFO has to have an holistic view about the business from a financial standpoint.
Okay. So, how do you now give the services and implement this into the your customers?
So what we do is we are virtual or fractional CFOs. Now the word virtual here is kind of misleading because it is not like we only function online. We do visit client places. We do sit down with the owners and build strategies around it. So why is the word virtual is because I'm not sitting there full time. That is the only difference. So I'm available virtually 24/7 and physically as and when the need be. And also the new term that is coined these days is fractional CFO, which means I'm a CFO rather than being a full-time CFO for one company, I'm a part-time CFO for 5 or 6 companies.
Okay. And what is the difference between accounts and finance?
Big difference between accounts. See, accounts is basically in layman terms, if you
Why I am asking is that why a person should acquire your services if a SME, because we have full-time accountant in place, and he's also doing some finance work. So what is the difference? Why a person should appoint a finance officer?
So an accountant, you have a full-time accountant. He is doing his work very diligently. Comes to office, posts all his entries in time. Like we said, he looks at compliances, ensures everything is filed in time, coordinates with your CA once a year during audit or during return filing. But is he talking to you on a daily basis about what is going on in the business? Does he have that understanding? Because he's been with you for many years, he might be very well aware as to how the finance is flowing through the business. But what decision needs to be taken at what time, that is the difference between an accounts professional and a finance professional. The finance professional will advise you what decision you should take when. Now, whether you implement that decision or whether you defer it.
Decisions like,
For example, if you are producing 4 products today, but one of them is not giving you any returns, but you've been producing that product for many years now. So then we have to weigh out as to see, it is not giving me returns, but is my market positioning because of that product important? Is that product my identity in the market? If that is the case, then we will have to look out for solutions where I can manufacture that product at a lower cost. And if it's not the case, then it is absolutely necessary to shut down that product. Look for something new or focus on the other 3 products which are giving you good returns. But the accountant will never be able to tell you this. He will say 4 products, he can segregate revenue for you, he can segregate costs for you. That's all.
Okay. So you can say the financial audit of every product and every processes is your key portfolio.
Correct. That is correct.
Okay. So how the processes can be mapped with the financial aspect?
So each process has finance embedded into it. Let's start from marketing. Each process has finance as a part of it.
Hmm?
It is always there.
Okay.
For example, let's focus on sales process. The sales process starts from looking out for customers, building a sales funnel, filtration of the sales funnel, conversion of orders, delivery, and cash. Order to cash is the process. Now, in the order to cash process, there is cost involved at every aspect. Customer acquisition is a cost, your sales team is a cost, your delivery, logistics, and delivery is a cost. Production and operations, I'm keeping aside because we are talking about O2C right now. And realization of the money after you have supplied the product is also a cost, because if you are giving a credit period of X number of days and money is being received by you in 1.5x, then that extra 0.5x which has gone for you to receive the money is also a cost. So all this needs to be analyzed, and that's what we do as CFOs.
Huh. You calculate the cost of every process.
Exactly. We first study the process, understand. See, every business की अलग अलग प्रोसेसेस होंगे. हर एक बिजनेस एक दूसरे की तरह काम नहीं करता, और हर एक को लगता है कि मेरा बिजनेस बहुत अलग है, मेरा बिजनेस बहुत कठिन है समझने के लिए, पर ऐसा नहीं होता है. एक जो स्टैंडर्डाइजेशन है वो तो बैकएंड में रहता है, बट फिर भी हम लोग जब किसी से बात करते तो हम वो प्रोसेस डिटेल में समझते उस बिजनेस की स्पेसिफिकली. भले ही वो उस कैटेगरी में हमारे पास 4 वैसे और कस्टमर हो, पर हम उस बिकॉज टू सेटिस्फाई दी ओनर एंड टू अंडरस्टैंड वी आर एक्चुअली अंडरस्टैंडिंग द प्रोसेस, वी सिट डाउन, मैप द होल प्रोसेस, बिल्ड अ प्रोसेस मैप, और फिर उस मैप में हर जगह पे जाके देखना है कि कहाँ कहाँ पे फाइनेंस इन्वॉल्व है, कहाँ कहाँ पे हमारे खर्चे हो रहे हैं और कहाँ कहाँ से पैसा बन रहा है.
अच्छा.
ये सारा मैपिंग करना बहुत जरूरी है.
Okay. So you map each and every process, you break down each and every process. वो उसका हर एक में कितना पैसा लग रहा है.
करेक्ट.
ओके.
करेक्ट.
इन चीज़ों का मुझे अगर डैशबोर्ड बनाना है, एंड इफ आई हैव टू स्पेंड 60 seconds ऑन एंड चेक कि मेरे कंपनी में क्या करना है, तो उसके लिए क्या डैशबोर्ड बना सकते हैं? सो व्हाट आर द की फैक्टर्स इन शुड इंक्लूड इन दैट डैशबोर्ड?
So of course, each dashboard will vary according to the requirements of the business. But if you want to generalize certain factors, then the moment you look at that dashboard, you should be able to see what is my sales till date, sales for the month, receivables, my payables, my stock, and my bank balance.
Okay.
These are the most critical factors, because these 5 or 6 factors which I just mentioned determine liquidity in the business.
Okay.
जिसको हम लोग वर्किंग कैपिटल बोलते हैं. वर्किंग कैपिटल का फॉर्मूला है बेसिकली करंट एसेट्स माइनस करंट लायबिलिटीज. ये तो जार्गन हो गया, बट बेसिकली मुझे कितना पैसा आना है, मेरे पास बैंक में कितना पैसा है, और स्टॉक में कितना पैसा है मेरा, और उससे हम माइनस करेंगे मुझे पैसा बाहर कितना देना है, और मेरे लोन्स क्या क्या है शॉर्ट टर्म में जो मेरे को देना.
ओके. ओके. सो नाउ अबाउट इन अ फाइनेंस वे कि लोन्स कैसे, a business, which business should take a loan or which business should not take a loan?
See, according to me, every business should take a loan, because your own funds are never going to be sufficient if you want to grow. The pathway to growth is either getting investment from an equity investor today or through debt. And in an SME, getting an equity investor on board is very difficult because it's a legacy business. There is nothing unique about that idea because there are many people doing that. So you definitely should take debt into your business. Now, कौन सा डेट लेना है, कितने परसेंटेज पे लेना है, ये बहुत इंपॉर्टेंट है.
Okay.
So what you should analyze at the outset is what is my margin that I am making, and into that margin how much can I accommodate finance cost. तो कॉस्ट ऑफ फाइनेंस मतलब आपका ब्याज का जो टक्का बोलते हैं वो ब्याज कितना लगेगा और वो मेरे मार्जिन को कितना इरोड करेगा.
Okay, Sudhanva, tell me, in finance, basically, many people don't know about the difference between accounts and finance. Many people are thinking about this is the account and finance are the same. Okay, so in and even in CA is also handling the things like the other clients. He never tries to educate his clients.
Correct.
The basically, I want to know that how a uh, pinpointing the finance cost or ROI on the finance and the tangible results we will get from calculating every finance and everything. Uh, could you explain over it? And also, could you share any example where you practically implemented this and the tangible result was this?
Sure, I'll do that. So basically, like you pointed out, instead of just analyzing how much sales I made or
Hmm.
how much profit I made, you should analyze how much return on capital are you getting. So
Okay.
you started your business, you invested certain amount of money to start that. It may be from your own pocket or it may be from borrowed funds. But you have invested money. Now you should understand that there is a certain return, a minimum certain return percentage which you should get out of that money invested. Otherwise, what is the use of you investing that money into your business? You rather keep it in an investment which is giving you far better returns than your business.
Okay.
So that is the whole idea
Behind this.
behind return on capital. So it is ROI is basically return over investment. But what we in financial terms in a business, what you should see is ROCE, which is return on capital employed.
Okay.
And an example that you mentioned that I should tell you, I'll share you that I have worked with trading organizations. See, now in a trading organization, VK is also a trading organization. A trading organization, the gross profit margin is very low, to be honest, because you're buying at a certain cost and you're adding some margin and selling it out to customers. But what is important is how much money have you invested into that business and what is your profit compared to the money invested.
Okay.
If that percentage today crosses 10%, then you are definitely doing pretty well, because at the only gross margin stage you will see barely 3 or 4% margin, but that is not the measure of performance. How many times are you able to rotate your money invested during a year, and what is the return that you are able to generate by rotating that money?
Okay.
So while giving CC also, bank calculates a CC to turnover ratio. It gives you a CC amount which is 1/5 of your last turnover, because they expect you to rotate your money at least 4 to 5 times in a year. So they will not finance 80%. If you go to buy a car tomorrow or a house, if the cost of the car or the house is 100 rupees, bank will definitely finance you 85, 90 rupees. But if your turnover for last year was 100 rupees, bank will give you a CC of 20 to 25 rupees, because
Right.
it expects you to rotate that 20 rupees 5, 6 times during the year. That is how you will keep building turnover.
Okay.
And your profit that you're making at the end of the year should be equated against how much investment, your own capital plus borrowed funds, has gone into the business.
Okay.
And if this figure, like I said, is upwards of 10%, that you're doing good. 8 to 10% is
8
a
to
very
10%.
good achievement.
And what about the manufacturing sector?
The manufacturing sector margin should be better because you have many factors in your own control.
Okay.
So there unit economics matters a lot. Unit economics is basically breaking your product, the cost of production of your product.
Okay.
So there the margin, a gross margin of anywhere between 25 to 30% is phenomenal. Anything up to 20% is also good, but then you will have to manage your indirect cost to a large extent.
Okay.
Your gross margin should be at least 25 to 30%, so that then you can incorporate all your further costs.
So, in daily basis or in monthly, daily, weekly, monthly basis, what a person should see in his financial reports?
So if you are in the manufacturing sector, you should calculate your variable cost. Variable cost is the cost which increases or decreases in direct proportion with your production.
Right.
And fixed cost is the cost which is fixed irrespective of you produce 100 units or 1000 units, it is going to remain the same. So variable cost is directly proportional to sales, and fixed cost is inversely proportional to sales.
Okay.
Because more the sales, lower is the fixed cost ratio to sales. So you should be monitoring on a weekly basis as to how much sale you have made, how much cost did you incur to make that sale, cost of sales, and what is the profitability between the two.
Okay.
And then at the end of the month, what should be analyzed is my fixed monthly cost, which is going, the total sale that I did for the month and the total cost that I incurred for that sale. After that, whatever gap is remaining, is it able to cover my fixed costs? If it is able to cover our fixed costs and you have a certain amount left after that, that is your clear cut in hand cash profit, which either you can withdraw and take home or you can reinvest it into your business.
But many of the times our profits are lying with in debtors or in stocks.
Correct.
But what the profit do you mean? Is because our profits are always in data list or in stocks.
No, what I am talking about is profit which can be seen and which has immediate liquidity, which should be in your bank. It should not be lying in stock. So my profit is lying in my stock or profit is lying in my debtors is of no use, because at the end of the day it is going to get washed off till such time that you don't sell the stock or you don't realize that money. So this rotation cycle that I was talking about, this needs to be monitored very closely. In how much time am I recovering my money, and what is my stock movement? From the moment a material enters my premises, what is the time frame within which it is shifted out of my godown, shifted out of my premises.
So can you more explain about the dashboard you gave it to the MSME owners?
Yes. Now these dashboards that are built for the MSME owner is for him, the feedback factor that I was talking about. डैशबोर्ड बेसिकली आपको आपके बिजनेस के बारे में फीडबैक देगा. अब वो फीडबैक आज के दौर में AI विद द एडवांस इन टेक्नोलॉजी एंड AI कमिंग इनटू पिक्चर, you can even build an AI agent for your own company.
Okay.
This agent, so you have the usual agentic AIs which are available across the internet, but a specific AI agent for your own business is now beyond the dashboard, because this agent can sit into your phones, into your portable devices, and you ask any question, it will give you an output within seconds. So you tomorrow ask me how much profit did I make. So for example, if I'm your customer, I purchased something from you a year back, and now I'm coming to you after a year, so there is a big gap. But now now costs have changed, now your cost of production has changed, many factors have changed in between. But you can ask that agent immediately as to how much did this customer purchase from me the last time, and what was the profit did I make, what was the amount of profit which I made on that order. Basis that, you can get the margin percentage and you can adjust it accordingly. Because if you directly quote to the customer saying, last time I had quoted you say 100 rupees and now you are directly quoting him 200 rupees because costs have increased, he will eat you, he will pester you saying that last time you had given me in this, costs have not increased to that level. But with tangible data, with percentage, you can talk very specifically.
So let's summarize. In dashboard, what do you need is first sales, then your bank balance.
Correct.
Then
Receivables.
third is receivables. Fourth is payables. Fifth is your stocks. Six is your profits. Fixed costs. Your variable costs.
I think the cost detailing can be left out from the dashboard. A dashboard is an overview.
Okay.
Then on a certain factor, if you want to drill down, then definitely you can go deeper into a certain factor. But the outset, I think sales, receivables, payables, stock, and bank balance is enough for
Okay.
everyday monitoring.
Okay. So I have, let's start with some of the rapid fire questions.
Sure.
So biggest money mistakes MSME make?
not taking feedback, and investing on basis only on gut feeling.
Profit or cash flow, which matters most?
Cash flow, definitely cash flow.
A budget scenario. MSME should have or can be excused.
Not excusable. You should always have budgets in place. How much are you able to adhere to those budgets is relative, but having those in place is very important.
How often a business owner should check his financials?
Every day, to be honest, but if that is not possible because most of the business owners are the face of the business, so customer acquisition and sales is their focus, at least once a week.
Credit card debt for business expenses, yes or no?
If the credit card is in the name of the company, then yes.
Okay.
Settlement of the credit card on a monthly basis is very important. You cannot keep incurring expenses on your credit card and just keep paying minimum due amounts and keep rotating it. That is not advisable.
Should MSME hire a full-time CFO?
I don't think they require a full-time CFO because that will have too much of a cost.
They can't afford.
For an MSME, hiring a full-time CFO will be too much of a cost on their cost burden for them. Rather than that, they can always have a fractional CFO or an advisor in place, and their accounts department is functioning perfectly for their daily requirements.
Best time to think about the fundraising.
Honestly, best time to think about fundraising is where if you have a new idea or you want to diversify or you are having a good potential sales in hand and you want to go for that order which you are sure will give you good margin.
Okay. Banks or investor, who is the better option? Or who is the easy one to work with?
I think banks.
Okay.
People always feel that debt is costly. To be honest, equity is costlier than debt because you are giving part ownership of your business. People don't realize this. People think equity investment is coming in for free. The biggest cost is you are giving a part ownership of your business to the investor.
Giving discounts to sell faster. In CFO perspective, what it is?
Again, if you have good margins, then giving discounts for a certain period is fine. Or if you're sure that this is going to give you good brand positioning, then I call this burning. But you can burn this. But the time limit should be fixed. And you should be monitoring it.
Biggest red flag in business according to finance?
Money stuck, lack of liquidity, and working capital gap increasing year over year.
What amount of salary a business owner should take?
So the clear measure is that number of years of experience into one is a minimal salary for survival today in today's
Into
one as a multiplication factor.
Okay.
Number of years of experience into 1.5 is a decent salary.
In lakhs.
In lakhs.
Okay.
Or number of years of experience into 2 or more than 2 as a multiplier is what you will be is what you will gain if you are a very good performer. So for a business owner, definitely the multiplier should be at least number of years of experience into 1.5. That much a business owner should be able to pay himself.
Okay. So Sudhanva, thanks for coming and thanks for sharing your financial advice, financial role play in MSMEs. I hope many people would understand the importance of finance and their daily dashboard needs. Thank you very much for coming.
Thank you.
Thank
Thank
you.
you for having me.